Don't you just love this stuff, man? It's almost like it's scripted. Monday's low, next target. Right, unless I'm missing something. No, I think that bit. Oh, it'll be Tuesday. Yeah, Monday's low. Shoot, Tuesday. Yeah, Tuesday low, previous day low, next target, and then the current week low. Sell side, previous day, sell side in the form of current previous day. Week low. Good morning. So, if you read the bias this morning, quite nice, right? Almost like it's scripted. Looking at post 10 a.m. for us to drop, and we're gonna probably continue to drop all the way to 3 p.m. as my guess. But it's funny because yesterday night, me and a buddy were looking at weekly profiles and how to predict them, and it'll be in the PDF. But whether you believe me or not, yesterday, what time was this? Yesterday at 11 p.m. I said, New York open reversal profile tomorrow down into sell side. Drop, retrace into 8:30, and then use London low as a target post 10 a.m. You know, I'll screenshot it so it doesn't look like I'm lying. But there's a way you can predict these profiles in advance, and it's, if you understand it, it's kind of broken, and you just look at the time windows after that, and you can hold it into time window. You don't need price. But anyways, actually, let me turn on my hyper trading. Close that really quickly. You know, leave it on. Is that current week low? And mark out the sell side really quickly. Yep, London open reversal, exactly. Perfect. The daily bias picture is really all you need. So that's going to be what's I'm looking at. Yeah, it's current week low. Sell side. You can see the IOFED in here. It's larger sibi formed at 9:30. But standard protocol, isn't it? 8:30 news. It's got to be one of those two. It's either going to be New York open reversal profile or classic London expansion. And going into it, we had, if you look at the hourly chart really quick, now if you're going to use a time frame, if you're struggling with bias, I highly suggest using the 1 hour. And like, if I had to pick one chart for my bias, it's going to be the 1 hour. But obviously you can look at the daily and the 4 hour and things like that. Let's go to the daily. Trading up into that volume imbalance, a lot of sell side below us. Same thing on the 4 hour chart here. We had the SMT between the Monday highs. If I quickly cycle over, that's SMT. And now we're looking for some sort of a 4 hour SISD or market structure shift. We got that both as we traded through there, also through that bullish order block. Then on the 1 hour, going into midnight, what do we see? We have bearish order block, sibi, trades up into it during London session. We break down SISD. That is, if you watch the second video, a meaningful manipulation, and then a change in say delivery afterwards, so that you would trust that as London high of day. What do you expect New York to do? Be basically a London open. It's either going to sweep the high and we're going to have SMT there, or we're going to have just a continuation profile, right? And 8:30 is going to be the high of the session. So I think we did have SMT here with YM, if I'm not mistaken. Let's go to the triple chart. Yes. So we had SMT there with YM, and then look at what time also we formed this swing high We also have short SMT here. I briefly look over it. Look at 8:30 forming the high of the session there to the tick. So then that short-term SMT, you're expecting if 8:30 manipulated, what is 9:30 going to do? Expand. What's the close range target that you see on a London reversal or any kind of profile, typically London low? Then it's going to be previous day low. Then it's going to be the current week low. So we have all these time windows, and then we're also looking at post 10 a.m. to form the low of the current session. I think it's going to drop into PM session. It's not needed that we capture all of that, but let me actually pull up the short that I took. I'll post it, but you can see basically how aggressive it is. So if this is high of week now at this point, we're going to drop into Thursday. So it's likely we're going to see current week low ran out, which is the sell side down here. 10 a.m. news can either expand again, or we're going to manipulate back into the range. But you expect at least that 10 a.m. is going to have some sort of expansion where we create the high, either with that candle or post, after it, and then we retrace back into the range. But that's typically what you see. So I'm expecting the 10 a.m. candle to probably shoot lower, maybe wick lower, and we'll have the low of the session formed at the 10 a.m. candle or slightly past it, and then we'll come back into the range. But now the draw on liquidity is almost just as important. So the current week low and the previous day low are both targets there. So let me see if I can screenshot. I think I'll do it on the 5 minute. It's probably easier to see. But there's a 5-minute order block paired with a sibi that I shorted off of. I'll put that in stream trades. But that basically makes up for the entire week. And accidentally, I had the daily profit target as liquidate and block, and I wasn't able to hold it all the way to previous day low, which I'm kind of bummed out about. But it is what it is. Nice. That breaker on the 15-minute gave me confidence that we're in the second stage. I love it. Beautiful. Now, there's also a couple things like minute details that I'm going to mention that you can look for. If it's, as we confirm this as a New York Open reversal, or as we displace into London low, this low that we're targeting here, let me actually send, if you care, let me actually send what I was going to. But this low should not be formed past 7 a.m., right? Because if this low is formed at 7 a.m., then you're looking at, okay, potentially it's a profile back up to the range. You should always have London low as a target for a New York Open reversal profile. Yeah, if you go to remix. How do I crop this? So now you're just looking at 1 minute PD areas, basically. Not the highest probability order block, but there is one there. I just put it in a trading hall if you want to look at it. Enigma found, question mark? No, I'm just kidding. This should be new low. So let me look at this. I was listening to the time video part 2. This part was exactly talking about today's price action inverse. Exactly. Yep. There you go. I got you. But yeah, I didn't add in there, but in the picture as well, there should be 7 to 10 SMT as well, right in there, right? And that would be this with ES. Yep, still no first presentation gap. Actually, no, technically there is. There's this tiny one right here. This would be first presentation. Don't miss it. Super, super tiny, but technically that is one. I understand it now. But yeah, with that, if we have London protraction, oh, I don't like this green. So we have something like this. You're always going to have two forms of SMT, or two, yeah, technically. This will be in the PDF as well, but basically, you're going to have SMT here. This is going to be directional for the day. You're also going to have SMT on the session, right? Now, if you have a New York Open reversal profile, you're going to have that SMT both on the lower time frame and on the higher time frame. So typically on the London or on the New York Open reversal, we'll have the SMT there and we'll have the SMT here. So that would be your directional and your momentum SMT. Obviously, you could find a tiny 1 minute SMT if you wanted to somewhere in the entry. I don't like using SMT for entries like that unless you're trying to soup. But in terms of like the easiest way to find it, that's kind of the schematic you'll see is SMT at there, and then you want to lower time frame confirmation of that momentum SMT on the session. Once we form that session high or low, the next time window should expand. And their time windows available would be 8:30, 9:30, 9:50, 10 o'clock. So those are like your key times, right? That's like your segments, your entry time frames, 8:30, 9:30, 9:50, and 10 o'clock. Whenever we form that SMT on the previous time window, that confirms we have a session high or low, and you already know the draw on liquidity, right? Main emphasis on that. And you already know the session profile, which is normally given with the SMT. Now you're just going to use the next time window to get in. In this case, we had 8:30 SMT, creating the high of session. We also had the session-based SMT with YM, right? So we took out the London high. We had short-term SMT there with the data highs. Therefore, I'm not expecting 9:30 to come up and manipulate this again, unless my complete bias is wrong, and I can live with that. We're expecting the next time entry to be served as distribution or to be served as expansion. So if this is manipulation, we're going to follow with expansion. That's why I'm comfortable getting in prior to 9:30 and then trust that that's going to be used as the distribution. You can see the relative equal lows, how smooth those were with the session liquidity pools. That's just beautiful targeting. Like you can see it's engineered liquidity. We're engineering that liquidity. We're leaving those relative equal lows, leaving the relative equal lows, and then we come back up. All of this is low resistance. Then we go. So this is a high resistance move, but it creates low resistance. And then we're going to drop. And that's just a nice distribution lower. And even if the profile is wrong, even if it goes to swing to Z, a lot of times, I'll cover this as well in the PDF, but on swing to Z days with 8:30 news, most times you can trade it because if we have a larger gap that we form with the 8:30, then a lot of times we're going to trade into that gap, which would still technically be swing to Z. Which relates to an intra-session profile that I've mentioned before. If you've been here since April or May, you know exactly what I'm talking about. I lost my train of thought. Or it's going to be something like this, where we basically continue the move and then back into the range. We may not form that new low. It could consolidate and then drop post 12. But it's quite rare for that to happen. I'm still expecting it to do something standard here. Significance of the first presentation gap, it's not super important, at least for my own trading. It's not like something that I'll strictly use as an entry or anything like that. You can extend it all the way out until 15:45 on the day, and you'll see on a consolidation day, we'll bounce from it a lot of times. You can frame the setup based on that, but it's good to just mark out. Sometimes you can get setups during the macro time, things like that around there. It's just, it's really just another gap, so I wouldn't place too much emphasis on it. At least for my own trading, I don't worry too much. You can see ES is still quite consolidating in here. Pretty messy. So the slight SMT with ES on London kill zone low should have been disregarded. Yes, I saw that this morning. I would have liked if that, because also think about this. What time, if we were creating that as the true low of the day, and this was a New York Open reversal profile, if we had swept the London low, what time would you want to see that new low formed at? At least by 7 a.m. Right? And then we expand up. Notice how that low is 615. Sure, we have the SMT there, but 615 can't be the low of the day if we're looking at one of those two high probability profiles, not including swing to Z. So that's even more of a confirmation as to why I'd be targeting that sell side. Make sense? So order flow, market structure, time-based lows, because you can use that too. But does that make sense, right? If this was actually sweeping it, and then we had expansion up, and that was at maybe like 7:15 or something, we expanded up, and then 8:30 formed the low of the session, and then we're going to expand it to 9 o'clock and take out those highs. That's different. This to me is a pretty classic profile where 8:30 is a high session and we continue down. But you can see if I mark out the 5-minute really quickly, this is basically what I use to go short. We had the bearish order block here on the 5. We also had not really any clear SysD, but the bearish order block there, pair with the 5-minute sibi. Also, in a short-term premium, all that met, I'm going to use that to go short. You can see a little bit of a run up there at 926, 927, but just tags it, respects the order block almost perfectly, and then drops into 930. You can see the 930, nice 50-point candle. You can see we're wicking up into this gap, and we're still kind of closing within this low probability order block range. But here comes the macro time, and you know this is already supposed to be the wrong low, 939. I'll screenshot this really quickly. Send it over. Oh, is the Max Gamer back? Oh, yep. Thank you for ever mentioned it. Lads, ban this guy. Nice retracement up there. Let me turn on the time window. You'll probably see maybe one last. I would favor if the macro gave one last opportunity, but you'll see 939 wrong low, sell side, put in the relative sell side that's going to be ran out. We're going to continue to drop into 10 o'clock. But you can see, and hopefully you can understand and appreciate when you have a good bias, you have a good understanding of time, it removes a lot of stress of reading price. Like you're not so much as to worried as, okay, as long as price is for the most part doing what it needs to do, there's less stress on your shoulders of analyzing price with utmost scrutiny of figuring out what PDRs you're going to hold and all that kind of tiny things. It's more of just relaxed kind of, as long as it looks right, as long as we are holding SMTs and things like that, intermediate term highs, all those PDRs, you kind of just, you can glance at it and this is how you can study it. And you have a good understanding of time. So if this is our draw on time, 10 o'clock, we have drawn liquidity that is here and also here. I don't know if there's a 1 hour gap. I didn't mark out any 1 hour gaps. We got a 1 hour gap we're trading into right now. 15-minute gap. A bunch of 15-minute gaps. I'm not going to mark it out, to be honest. Yeah, I could care less. More interested in liquidity here. Nice SD. Let me actually take off some of the partials. And there's one partial. So previous day low ran out. Move this back to break even. Let me turn this off. So previous day low, look at the time window, 9:54, still outside of it. So I saw a good question. Oh, there it is, previous day low. Right now. But I'm talking about 8:30 and 9:30 specifically. It's going to be the 15-minute candle. Like when I'm talking about the high and low of the session, it's that 15-minute candle typically. It also can be the exact time window. Now, when I'm talking about like a new low, why is this spazzing out? When I'm talking about a new low, like post 10 a.m. or a new low before 12 o'clock, those are very, very specific 1-minute candles I'm referencing. So like 10 a.m. past low, it shouldn't just be that entire, it's not slightly before, it's not slightly after, that's like the line in the sand. Now 8:30 news, a lot of times 8:30 will be the exact high, but we're also giving it, if you look at the 15-minute chart, we have that 15-minute candle that then prints. Why is this still spazzing out, man? That would, to me, qualify that as the high of session. So it's like a flexibility between time windows, and it's not something I can explain really. Like I don't know how to really give a good definition of that. Like in here, it's both the 15-minute candle I'm expecting to drop at 9:30, but also right at 9:30, that's the volatility driver or the volatility injection. So it's that same 1-minute candle. It's kind of hard to explain, I guess. We do have 10 a.m. news. Now, two functions of 10 a.m. news in this case would be either to manipulate or expand. I would favorite expanding in this case. So say, for example, we form this as a low, and then we come up to here, and then the news shoots up. To me, that would look like a retracement entry, and we're going to target that new incorrect time-based low. Because for the weekly profile, at least, that to me looks like a, what's it called? Tuesday high of week with SMT. So we're going to drop into a new day of week, Thursday. So Thursday, tomorrow I'm expecting either a swing to Z profile or a classic expansion. It shouldn't be a New York Open reversal, but that'll be, plan on doing a full lecture specifically on time in the near future. I may do it. It's going to be such a difficult video to really compile everything. A lot of it will be in the PDF regarding the New York session. So that'll be, I'll probably just contain it. What we're going to do in 2025, if you didn't read the announcement post, I highly suggest you do it. But I think in 2025, what we're going to do is I'm going to put stuff in that PDF. And then like in December and January, or late December or early January, we'll have the lectures that basically explain in concepts, in depth about the concepts that I'll put in there. Like, for example, there's going to be one about breaker entries and how they're the first stages of price delivery in a market maker model. So you know that most times when you have a breaker entry, there's going to be a second stage of distribution that follows, and that's also going to be time-based. So you can either pyramid in or re-enter and use that to target a new time of day. Like, that's not something I've mentioned before, but it's something that you'd have to see visually for me to in-depth kind of show this is what it looks like on a high probability day. When you have a breaker entry, there's normally going to be that second stage, either that pairs up with a mitigation or pairs up with. Anyways, so that'll be like the main focus, is we'll just cover that kind of stuff, and then it'll be privatized, and then I'll probably post maybe like one main lecture per month, but the most of that will be in the private group. And then like obviously the market reviews will still be posted live on YouTube for public. So we have news here in 2 minutes, and you can see what time is this at? 9:55. Could be using, still not the best order block here, but I'm going to still mark it out. I actually favor this gap here. It's a tiny gap. Sibi. Don't forget about Black Friday trading view as well. If you didn't pick it up yet, you got about, I don't know, 4 days left, maybe till Saturday or something, or Monday. I don't even know. But might as well pick it up earlier than later and just get the as much percentage as you can off. I got the premium version because if you have essential, that's the minimum you should get. But the difference between plus and premium is $1, and I'm just gonna might as well, right? So I do have access now to 15 like the second charts, but I'm not gonna be using these. Like I'm not gonna be tape reading from them or anything, and I highly suggest you don't even drop anything below the 1 minute. It's really just at that point it gets a lot like noise. Not noise, but it's really difficult to read if you don't know what you're looking for. And you have to have a really good understanding of already the 1 minute as to what to look for in the 15-second and 30-second. So I really think that the 1 minute is already hard enough. So first study the 5 minute, the 3 minute, then you can go to the 1 minute. Yeah, you pay it straight up and then it's discounted on the monthly fee. So the annual fee is still discounted. Here's your news. Like I said, I want it favored if it's used as expansion and we take out that 955 low. But even if we do shoot up here into this gap or into this gap, I would use that as a retracement entry to target that new time low. But as of right now, it looks like we're going to drop. See the order flow, the market structure is all pretty bearish. We got this as an intermediate term high now. Then this would be the short term high. Technically right there. Another one right there. So that's your market structure on the soup. Inside inefficiency, drops, SISD, bearish order block. We're trading up into that prior to the 10 o'clock news release. That would be a macro entry. Could also use the SISD as a macro entry. And we're going to drop into post 10 a.m. Clockwork. Yeah, you still have to pay for the CME live data, which is maybe like $5 or $7 a month. It's just not like they're taxing you. But I think the full there's your new low. The full deal is like 70% off on the highest one, and then 40% off on the middle one, and then 30% off on. It's like a fourth of a point. Okay, on the last on essential. But if you're just new to doing it, just get the essential one and then get the live data. That's all you need. I don't think it's anything above the plus is really needed. I don't think you need second charts. I don't think you need 8 different screens to be looking at. If you want to have multiple screens, I suggest getting the plus version just so you can have multiple layouts saved like I do. But I don't think it's necessary. There's your new low. Right on time. Can't you see? I hope that's like what 2 or 3 weeks straight of you only need one setup per week, and you know what days it's going to show up. You just look at the economic calendar. You know exactly what days it's going to be there. Just trade those days. This is plenty of movement. Like from here to here, 126 points. From this inefficiency drop down to previous day low. From the order block down to that low. All those are setups. And I'll never signal bot or anything, but I hope you can understand the framework given on the daily bias and then the structure of the market. And each time we have a premium array that's traded into, PD arrays will hold if the draw on liquidity is correct. The draw on time also has to be correct. So PD arrays are just an entry function. You could really use enter anywhere, and the PD arrays are going to hold. It's just understanding the draw. Like think about this: if you know where that next 1 hour candle is going, well then you could enter in technically anywhere as long as your stop loss is in a good spot. That stop loss isn't going to hit, and you'll see that every single PD array is held after the fact. So PD arrays will hold if the draw on liquidity is correct. So you have to just use any premium array, any array that makes sense to you. Fair value gaps is what's easy pickings for most. And then order block, SISD, inversion fair value gaps, any of those are perfectly fine. And then you got to draw on liquidity. Now, I do think that the current week low is going to be tagged 2754. But in terms of the New York session, that would be everything that's scripted to. Straight from the daily bias. right? Institutional order flow in the 1 hour going into 9:30 seems to be bearish with SMT on the Monday high, looking for hourly CBD hold price lower as 9:30 to 10 o'clock pushes into relative equal lows past here. And then it should be past London low. So the reason I told you that London low is the low hanging fruit for New York open reversal days, right? But you have to also think about the weekly profile. So if the weekly profile states that we're reversing, well, then we're likely to see that we're going to target now a 3-day look back one of those days. So the 3-day look back from today would be technically Wednesday, then Monday, then Tuesday. So that's your 3-day look back. So Monday and Tuesday, whatever those swing lows are, that would be your targets on price. So you have current day low, you have previous day low, you have the current week low. All those are time-based liquidity pools that I mentioned. And you already know from probably some of the other screenshots of what to target based on the profile. But this would be the low-hanging fruit. But if that's the weekly high, we're not going to just sweep this and come back up. We're going to sweep this and continue going through. So weekly and daily profiles seem to be lining up, given further confluence we want to move lower. And then the 10 a.m. news, obviously not a huge driver there, but still dropping into a new time of day. And now at this point, you could see if we want to retrace or not. Everything has been met. Also previous day low, this to be a 15-minute PD array. And then what do you know if we're targeting previous day low, which is an ERL, what are we going to be coming from? An IRL. IRL to ERL. IRL and premium down to ERL. Can mark it out a little bit smoother here on the 15. IRL and premium to ERL sell side. Sneak peek into what I'll have on the weekly profiles for the PDF. Market reversal days are typically either going to be we're putting in the weekly high or low. This is either going to be a New York open reversal or swing to Z days, because that's typically where you have the New York forming the higher low of the session. But it also can be, these are typically classic or New York open reversals, and then these are typically swing to Z / New York open reversals, because that's going to be a reversal in the market. London expansion, the London protraction profile typically doesn't form the higher low of the week. That's going to be used to actually get to that objective. And then you pair that with the economic calendar, and you kind of know where and when it's going to form. And that's why I was able to, if you look at the trading hall chat, that's why I was able to last night point out what I'm expecting. New York open reversal profile tomorrow down into sell side, drop or trace into 8:30, and then use London low as a target post 10 a.m. I have different prices for previous day low and previous week low. You're on the NASDAQ continuous contract. And you may or may not have break even adjust on. I use the continuous contract, and I highly suggest most people do. For things that don't really matter as much, like SMT, where we don't need precise levels, or this one I don't really need the current contract. But in terms of bias and intraday profile or intraday tape reading, I'm going to use the current contract. I don't know when it actually expires. I think this is the December contract, right? Yeah, December. And then the next one is what? March. Overanalyzation got me today. Got to just find one model that works for you. Don't got to jump around. Analysis paralysis comes with ICT for sure. But that's why you have to strictly find one model. There's too much information that you can't pair it all together. Find what works and then kick everything else out. Yes, lagging. Oh yeah, it is. We got the new low. Oh, we didn't take out this. Yep. But you already know this is going to be high resistance because we had the SMT there. We already swept that low. Was scared to short pre-market, didn't want to be wrong that early, even though I felt I was correct. It was a good learning experience, right? So now you can, if you have a good bias as to why 930 should expand, and I highly suggest if we're going to use 930 as an entry point, strictly just use 830 news and have this exact profile where 830 is creating the higher low of the session. So this could be higher low of the day or higher low of the session. We're manipulating at 830, expect 930 to expand. That's the only time I would say that the 930 entering in pre-market is a little bit higher quality. There's a couple other ones, but that's really the main one I would focus on. By the way, we got this gap, and then the bearish order block I'm going to mark out would actually be here because we have the volume imbalance. So watch that. But then also, you know, if you're scared of short pre-market, let it play out. Let a new retracement happen as long as it's before 10 o'clock and you trust your draw on liquidity. Get in there, place a stop that's reasonable, and then ride it into the next draw. So the next DOL that I have in mind is 2755, as mentioned previously. And then 2693 would be after that. But, you know, the next drill as well for time would be 1030. It's not necessary that we hit that, but that'd be the next full session profile there. Which if we continue to hold this price action, then I'm expecting it could. It's all extra at this point, though. We got time and price lining up here. Actually, here, sorry. This is why YM a lot of times is quite difficult to find clear SMT because it's gonna do its own thing. It's really kind of wonky sometimes. So the only times I'm really looking for YM SMT, I know someone asked this earlier too, is on 830 news days. And I'm still being very, I'm cherry picking exactly what I want. So I'm looking at, it's either going to be, really I'm looking at session liquidity pools. So did we sweep London with YM? Is there any form of, what did 830 do with YM? That kind of stuff. Beyond that, it's not as precise. So I'm not really looking at what it could do. I'm going to put some alarms down here. That's the current day low on ES. Expecting that to drop. You also have a gap here too. Gap and order block. This is actually an entire order block range in here. So it looks like we may drop into 1030 into that sell side. Oh, appreciate you, Zay, posting the Atomic Habits PDF in there. Oh yeah, I don't know if you saw it either, but there I posted also a mental map of psychology of how you should approach it. I'll ping it in. If you go to the psychology chat, you'll see it there. But it's a mental map of really how you break your rules. Like how does it actually happen in your brain? This is what I've at least seen in my own brain. But there's, I'll see if I can paste it here. I don't know if I can. Oh, I don't think I can. If you pull it up, I'll briefly go over it. We have, first it starts with an illusion-based thought. So it's going to be basically, you take a loss and you're like, okay, I have more room to overtrade, or I need to get this back quickly. So that's some sort of illusion-based thought is how you start this entire cycle. Then it drops into an idea or a habit that you've done before as to respond to that spike in dopamine and adrenaline, creates an uncomfortable state of mind. Then you have two parts from there. You have the button pushing, which is the undisciplined action, and button pushing in the sense of over trading, over leveraging, is just a coping mechanism. So when you tell yourself, I need to stop over leveraging and over trading, you're not really actually dealing with the problem. That's just a coping mechanism that you've developed to treat that uncomfortable state of mind, that pain that trading brings. So that, and then that obviously will bring more pain and regret. But when you get to that uncomfortable state of mind and you resist it, so the resistance to the impulse, that creates even more pain. So you have this time window where you have an action phase. And that action phase is as soon as you get that thought, you cycle through, you have that spike in dopamine, you have that uncomfortable state of mind, and then you have that initial reaction to resist the impulse. That's where you have to, you can't just resist it, because the time that it takes to you to resist really, that action is just going to, the coping mechanism is going to look more and more enticing to take. So what you have to do is you have to fill that void with some sort of an action or a combination of actions. And the healthy action phase that I've listed there is a combination of new thoughts and distractions. So you have to think about something else simply and distract your mind from what you're focusing on right now. You have to have prevention measures in place. So like locking yourself out, walking away from the computer, all those are examples of prevention measures. And then some sort of injecting logic to counter the fears. So you have to have some sort of list of injecting logic, and injecting logic would be, say, this is why I encourage journaling during your trading. But say you're in a trade and say you shorted from 930 and you're riding into previous day low. You could say, okay, I'm expecting price to retrace. It's completely normal for price to retrace up during this time, during macro time. So I'm not going to instantly close out my position, because I know that through my model, I've seen this plenty of times happen. And therefore, it's likely that we're going to see this continue. And that would be an example of injecting logic, where you're countering that fear that your brain is kind of throws in there to remove the pain with actual sound logic. And then obviously if you take a loss after that, you're injecting more logic of good traders always lose. They always have a plan after they lose, because it's the best loser wins in this. So what am I going to do as a result? Or I'm not going to try and overtrade here. And then limiting would be leaving or locking yourself out of the account. And then some sort of new distraction, a new thought. It could be go and do push-ups. It could be go and make breakfast. It could be go outside for a walk for 5 minutes. And if you really want this, you have to do those kind of things. It's not like you can avoid it. You have to simply just do it. And it's uncomfortable, and don't let your pride get in the way, or your ego of, oh, that's not something that I need to do. If you want it bad enough, you'll do it. Simple as that. Ask yourself, am I truly thinking objective? Exactly. And yeah. And not the animal phase. And there's really a whole actual biomechanics of it. You basically are activating your limbic system when you're trading psychologically. You're pairing losing with survival. So your brain thinks that you've already had these unrealized things that you want to do with trading in your mind, of it's going to pay off whatever, or you're going to pay your next food bill, things like that. And you relate survival to trading. And that's your limbic system kicking in. The way you can activate your prefrontal cortex, your actual logical thinking of your brain when you're trading, is, like Assyrian said, meditation helps. Being self-aware helps. So journaling constantly. All that stuff is going to be helpful in really being self-aware and having the self-discipline. And it's not some magical thing that's unachievable. I know everyone talks about self-discipline like it's this unachievable goal. It's really just, it comes down to willpower, sure. And it comes down to making it as easy as you can. So like cutting everything out is not going to be like a healthy way to get discipline. It's a balance of everything. You have this gap. I'm expecting this to be IO fed into. We have a gap left open over here. We took out market structure multiple times. There's no bearish order block next to it besides this one. But I would like if we just wicked up into this, even into here, and then traded lower. You can see 1030 is the new time window. And here, 2754. Let me get my notebook really quickly. Bias was completely wrong today. I was more bullish than bearish. If you have a recorded part of it, like if you wrote that down, or if you wrote down the explanation as to why you got it, you could send it over to me. I could look at it. Or if you already know exactly why you're wrong, it's just another thing to journal. But I think I highly suggest, like, if you have some sort of your own Discord server or your Notion or something, you can store, here's my bias going to the day, similar to kind of how I do it. Just write that out. Here's my bias. Here's where I think it's going to go. Here's why, and here's when it's going to get there. And then if you're wrong, you can go back and you can study exactly why you came to that conclusion, why that conclusion was wrong, and what actually happened. And that's the benefit of going in post market and screenshotting everything perfectly, because you get that replaced hindsight. So what you saw live gets replaced with what's actually going on in hindsight. And that's how you get really, really good. And it's just by doing the difficult work of that. Could see the 15-minute market maker sell model, but couldn't hold the trade until previous day low and exited at Tuesday London low. I was afraid of thinking losing the P&L. How can I correct this, or did I act the right way? Also, 1 hour SMT mitigation block was a clean signal. If this is, depending on where you entered, if this is like a larger range than you typically trade, I think there's nothing wrong with closing out the position. Now, if you were over leveraged and you were looking at the P&L and you were trading based on the P&L, that's a different story. But if it's a larger trade than what you normally take, I don't think there's anything wrong with closing it. But the way that I would frame, like, the logic as to why you could hold it past London low is because of the weekly profile, right? So this is the first time we're forming that higher time frame SMT up here on Tuesday. So Wednesday is likely to expand, and if the weekly profile is like this, we're not going to just get a weekly profile where it closes right here on the week, right? We're likely to see like that, and then it comes back in. So that means all those current days on the week, whatever the sell side that was formed over here, that's all going to be ran out. So that's the logic as to why I think previous day low and the current week low was going to be targeted in price. You can also target a new time of day too. Did we get the IO fed perfectly? Are you kidding me? We missed it by a tick. Please. Unlucky. You can see the 5-minute actually did it. The 5-minute did it. Nice. IO fed right up into it and moved lower. And the way you can kind of look for those is breakaway gap left open, IO fed after a short-term low is broken. You could also be using over here the market maker sell model, but oh, did it happen on MNQ? Maybe it happened on MNQ. No, it didn't here. Man. Oh, there's ES about to take out their low. You'll see the alarm pop up. Probably hear it too. And I was convinced it was bearish during the 950 macro, but fear got the best part of me due to yesterday's reaction. What led you to switch bias or use a bearish bias? 950 macro, or just I see after post 930. That makes sense. Yeah, figure out what that fear is rooted in. If it's yesterday's price action because we had to swing to Z-Day, then look at the differences there. If it's rooted in something else, then you really gotta dig deep and figure out what it's based on. And if you look at that, that's why it's always based on some illusion. It's always something that you tell yourself or you thought you heard of how trading is supposed to be. when in reality it's completely different. Our preconceived notions, our ego get in the way of what the market typically is trying to teach us. Anytime I see an IOFED, the ICT screaming clip comes to mind. Which one? I think I have one of them. I know I have one of them. Talking about the Romeo thing. Oh, is this it? Listening to Twitter version. Yep. I know what IOFED stands for, but what actually is it? So yeah, IOFED, if you don't know, Institutional Order Flow Entry Drill. It's basically the most sensitive entry you can get off a fair value gap, but it's in theory, it's the best case is where you just tick out the gap. So if this is the gap here, and I don't think I misaligned it, right? There's no there's no volume balance. It's basically where you have one tick, not 1 point, one tick up into. So if this was here, 2818.75, this would be 2819 would be the IOFED entry. And that's what I'm looking for. I'm just a tick up into that gap, and then we sell off. Basically how we did. We just missed it there by literally a tick. But you can see on the 5 minute, we basically got it where it's this really quick entry, and then it drops into it. Same thing over here. Yep, odd 933. Exactly. Similar to this, where we just kind of slightly get up into it, and then we shoot down. Typically, that happens when you have a couple things. So the framework I gave was the breakaway gap here being left open, another gap forming, and a short-term market structure shift. So it should be some sort of a instant break of a swing low, either from, if we're bearish, either from the left side of the chart or on the short term. And then there should be PD arrays that should support it. So some sort of a bearish order block, some sort of breakaway gap that was left open, things like that. And you can see we're dropping to 1030 here. And all the PD arrays in this. Look how clean it is. That's why you only need 1 day out of the week. Is it used on breakers and order blocks as well as fair value gaps? From my understanding, no. It's just on a fair value gap that you get the IOFED. There maybe is something similar to that, but I don't know if it would be called an IOFED. But as from my knowledge, it only applies this terminology, and the only thing you see of this applies to fair value gaps specifically. There's ES taking out their London low and their current day low. So up to right there. Yeah, a lot of the times it's next to the silver bullet or within the silver bullet. I'm not gonna get into that now, but I mean, it would still be like if you had a breaker that was traded into instantly and you have a wick, a tap off of it, that's still a really strong entry, right? Like I guess the strongest entry you could ever have, obviously besides a turtle soup, would be like one tick into a mitigation, and then we fly off that, right? Because mitigation is the strongest PD array. Or one of the strongest ones. So if you like tick into that, we fly up, that'd be like the best entry you could get, I think. Unless I'm wrong. Do you think PD arrays that overlap with the fair value gap are any good? Yeah. Order blocks with fair value gaps is perfect. I love that. It's one of my 2 entry types that I favor. Either a breaker or an order block that pairs up with a fair value gap. But yeah, when you have PD arrays that line up, stack on top of each other, it makes it a stronger range. You don't pattern it and say, oh, just because there's a bunch of PD arrays that line up here, I'm going to get in and that's going to hold as resistance. That's not how it works. It's obviously framed about around narrative. It's always framed around narrative. Where and when. Had this entry, taps the breaker and leaves, I had 1 tick drawdown. Yeah, that's crazy. I like it though. Perfect. That's a really, really strong entry. It's that breaker, right? That's his T. Which technically, yeah, I don't even know if technically it's right there, right? Yeah, swing lows would be a discount PD, right? Technically, because that would be some sort of a market structure shift. So you can see in here, this is actually the breaker. That really, really low, that swing low there, that's what we refer back to, right? If this candle comes back up and then trades lower, that's where it tags. And that's where JKX entered. He had 1 tick of drawdown. Got his limit fill, and it just sold off. Execution. Love it. Sensational. It's quality stuff though. I like that. That's like a textbook entry. Similar to the entry we took like what, 2 weeks ago or last week on stream? Or I took on demo, obviously. Let me see if I can find it. The one with the inversion gap when we traded through. You scroll up on stream trades, look at the 11.15 and the 11.21 two trades, similar to that, where we have this kind of retracement, projection off of it, inverse a level, first inversion level we form after that retracement leg you get in, and you ride that down. And then you have a tighter stop typically. So whenever you have a larger gap like this, say you don't want to trade inside this gap because then your stop is 60 points, which you shouldn't care about the stop placement, but in terms of like risk to reward, say you wanted a gap, enter in here, well then the stop loss is up here and your risk to reward is slightly messed up. Well, then what you can do is you just wait for some sort of retracement into it, an inversion level, so some sort of a bullish PD array that's broken and traded through, and then you look for the next time window and draw on liquidity to get in. So this would be your first inversion level, the bullish order block broken through, sys-D, taps up into the wick, you get in there, stop loss above here, or even above the breaker if you're feeling quite nice. And then it drops, you use the order box, etc. You can see how perfect the precision there is. Order box traded up into, bearish order block. And the reason I picked this specific range instead of this entire range, there's a volume balance there. So just like how you minimize or expand inefficiencies based on the volume balances, you include them in. With order blocks, you don't include this part. You just include this part. And that would be the volume balance. You can see the precision levels there. All the candle closure below it, wicks up into it, drops again. Inefficiency, IO fed, drops down again. Bearish order block range in here. This is the entire order block range now because there's no volume, or there's no volume balance in there. This would be bearish order block. This should also be a propulsion block. So we shouldn't see consequent encroachment of this. You want to see the new low post 1030, or yeah, post 1030. Yeah, SMTs will be in the PDF for New York session and kind of the weekly profile as well. Oh, let me actually do this too. We'll see the last runner on this guy. Yeah, this will be posted onto YouTube after the fact. So demo position here, but where did I enter in? Oh, 120. But if you go back, this was framed on what I said at 11 p.m. chill. But yeah, framework around this. I got close to London high. I should have waited to 2 to 3. But framework there, and then framework in here. I sold it slightly later too here, but I was trying to use that. I was trying to use this mitigation block in here to get in. Mitigation, taps it, drops a little bit. That was the entry. And then we'll see partial there at previous day low, and then the partial at the current week low as well. So we'll wait for that to get tagged, and then we'll wrap it up. Stop was at the London, it was at the Asian high originally, and then I got trimmed to London high when I entered in here, and then I got trimmed to break even, which I can actually trim down to here, or even here, now that it's quite close. Demo trade, obviously, but just testing out some things that we looked at yesterday. Demo baller. Me in the market today. I love it. See you, JKX. Take care today. But yeah, same framework in here. It'd be like, if you could, take the 2. Say you had one contract, right? And you linked 5 accounts. Take that all the way down to current week low, 186 points. multiply that by your 5. That's why I said you only need 1 day per the week. You understand it. You practice. You deal with it over and over and over of losses. Like, it's just a matter of time. So you got to frame it. It's not impossible. It's just a matter of time. This is just your little tuition. All the losses are just a little tuition. You look at propulsion block, by the way. Sorry, I'm rambling on here. But propulsion block, we're not going to trade up. We should just use this. It's a previous up closing candle range we displace. This is another order block that trades into or approaches a previous order block range. So this is a propulsion block. We should not see mean threshold of this traded into or closed above. So preferably this upper portion should be left unfilled. This is like the breakaway section of the breakaway. Screenshot this and put it in predictions chat. Gonna run. Yep, sir. See you, Matty P. Take care. Yeah. Happy Thanksgiving. Oh, yeah. I forgot about this tomorrow, right? Yeah. Are you risking based off percentage? You're fine with losing your PD raise, even if it's more than you're willing to lose. My risk on actually, I don't know if I can say that. My risk is based on total drawdown. So it's based on whatever drawdown that I have. I don't suggest using something like a strict RR points or stop loss or risk or points based. I don't think you should use that either. So if you're using, because the problem with that is that you get subpar entries and subpar stop loss placements. Your stop loss needs to be a point of invalidation. So a point based or R based is not a point of invalidation a lot of times. It's just this constraint that you put on yourself. So I suggest, using a position size calculator. I coded one on Python. If you want to use it, let me just send it really quickly. But it's quite simple. You just download Python. You can just punch in the numbers. This is what I literally use every day. You just punch in, okay, what asset are you going to use? What is your risk and how far is it? Oh, there's your take profit. Nice. And you can see, look at how beautiful the propulsion block there was met. Left this open, traded up into it, and immediately trades lower into 1030. And there's your current week low. Sell side. So I guess I'll get the entire screenshot into it. Put it in stream trades as well. About predictions, let me zoom in here, take this off. Log out. This is the thing that I'm more interested in. The trade does not matter. Look at just how precise the day was. This calls for a GIF. Which one are we going to use? This guy looks kind of cool. And we're still dropping. Yes, sir, Ace. Out of curiosity, when do I trade? I trade. This one is just a fluke, but I'll trade between 9:20. Like majority of my entries will either between 9:20 and 10:10 as my entries. Even in this window here. Most of my entries are scattered in there. If you have like a shot plot, that'd be where it is. Even more clustered within the macro time. And then kind of clustered around 9:30 as well. I'm typically not entering between 9:30 and 9:50. most times, but if I had to pick, like gun in my head, I'm using the 950 macro. And if you know about the world's on the line, who are you taking for the game winner? The 950 macro is Iguodala in my mind. That's what I'm using. Close second would be 930. But yeah, if you look at the first picture I took, that's just an example of what I would use. Second picture, obviously a fluke and holding, swinging the entire daily range. But I mean, think about this. You could basically swing the entire weekly range if you really understand what's going on. And I'll have that in the PDF of how to predict market profiles. And if you know how to predict market profiles, you can swing entire weekly ranges just using time, because you know what day of the week you're targeting. You know what time it's going to have an entry between 2 to 3. You're going to have the swing high. That's why I should have stayed up till 2 and taken that first SysD on the 5-minute and shorted there. But no. Yeah, most times I'll be trading on a different screen. I have 3 screens. One of them just has higher time frame. One is the one that you can see right here, and then there's another one that I'll typically be trading on. And that's why sometimes you'll see me post them, other times I won't post them, and that's just for my own mental capital. I found that if I share every single one, or if I try and demo in the beginning of when I started to open the mentorship, I would demo trade every single day, or demo trade like copy my positions. To be honest, it just adds too much mental tax for me, knowing that people are going to copy it, whether I say it or not. This is demo trade. People are going to copy it, so that's why you won't see me demo trade every single day. Or I'd rather just point to things and you see them exactly print how they're supposed to. Like I personally don't think that there's a lot of other people that I've seen, at least, that can understand the 1 minute and the 5-minute, but really the 1 minute as well as like, not to say anything like I'm crazy, but because this is all achievable. Like if I could do it, anyone could do it. I just sat in front of the charts for plenty of time and it came to me, and I'm trying to shorten the learning curve, is just give you, here's exactly what I figured out in 3 years just to study this. And if you study that stuff that I say, you'll be blown away with how quick you'll come to it. So I don't think that there's, besides ICT and maybe someone like Dexter's Lab, like one of those crazy schizo swing graders, like those guys are crazy. But in terms of like PD arrays, I don't think that there's going to be much better information than most of this. Like predicting IOFEDs, predicting propulsion blocks, identifying them correctly. It's all achievable. You have to just know and study it and see it enough. Which is also why I'm gonna try and keep the frequency of these just to these high probability days going into December and into 2025. But there's your full day. So please, 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 this is like a perfect day to go back and then screenshot and backtest. So if you're not doing anything later today, you got 15 minutes or 30 minutes, go back in, delete everything off your chart, and literally from the higher time frame down to the lower time frame, screenshot everything. Mark out what's important on the hourly, what's important on the 15, 5-minute, 1 minute. If you want to screenshot, I'll copy this if you want it, and I can post it into, I mean, yeah, I guess you could use the one in predictions chat. That one works too, but I'll post it here in this chat if you wanted to save it really quickly. If you want to copy that and mark it out, and the point of this is you want to replicate what you would, this is basically exactly what I would mark out if I was going back in on the day. What would I mark out? This is similar to what I would mark out. Like if I was going to delete everything, this is typically what I would have. Maybe delete some of these short-term highs I don't really need. But that's what I would have. Maybe mark out some times and some, some ranges and things like that. Like how far is this to sell side? But that's basically what you're doing. So you're programming in, what are the things that I like to see? For 30 days, you do this, right? What are the things that I like to see? What are the things that make sense to me? Where's my model? Then you screenshot. And that's why on the 1 minute, once you figure out their bias, you're just marking out these PD arrays. And then eventually you'll see it enough in hindsight that when it happens in real time, you go, okay, I've seen this before. Let me just mark this out. It should do this. It's going to hold here. And we're not going to see it violate through. If it does, then what's the next PD array it can tap into that would still keep my bias? If that's the last line of the sand, well, then is there a reason to flip bias? or you're just going to turn off the charts. Simple. It's really only two things. And you'll know through experience as to when to flip bias and when to turn off the charts. And typically that's just completely associated into probabilities of the day. Like I think yesterday I was looking for bullish price action. We had that inefficiency we traded into with the bullish order block, if I remember correctly. We traded up and then we just shot down and took out that intermediate term low. That's not a day that I want to switch bias. I would rather turn off the charts on that day because I know the next day is going to be an 8:30 news. And what are we going to get as a result? Very clear one-sided directional delivery. That's, in my mind, easier to read than something that's you're scrambling back and forth. Like the high probability days, you could learn something like this within 2 months of seeing it. I think there's every single person in here could learn this. It's just, it takes time, but it also, you have to know when to show up and when to not look at the charts. There's so much importance in knowing when not to, because that's when you avoid a lot of these terrible losses. Let me scroll up. I missed a bunch of stuff. Do you have a video on weekly profiles and recognizing high and low probabilities related to weekly profiles? I don't think I have one specifically. I think there's part of that in the in-depth market maker model guide for the New York session. I think I cover that slightly of what news days I like to look for. I'll cover it more. It's one of the table of contents in the PDF. As of right now, let me actually look as to how many chapters there's going to be. Because I'm actually curious. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. There'll probably be like 30 plus chapters, I think. If I counted correctly, probably more pages, but something around there. I still got to write it up though. So, but yeah, that as of right now, the table of contents has got a bunch of stuff, and some of it's gonna be short. Like I have a page I'm gonna write about time distortion. ICT hasn't really said a lot about it, but it'll just be like my brief explanation of like algorithmic theories, like time distortion and how it applies to the New York session, things like that. There'll be almost everything you'd need. How to find bias, how to trade. There'll be different models in there, algorithmic theory, SMT, functions of time, profiling the week, profiling the day, profiling the session, how to tape read, utilization of midnight and opening price at 8:30, everything in a market maker model, targets using fib projections and standard targets, economic calendar, weekly profile, when are Mondays good, swing to Z days, how to trade swing to Z days, intersession profiles, textbook examples, a short rant about risk management and psychology, summaries about the videos, the essential videos I posted, and then credits. So yeah, that'll be the Christmas present. Like I'm trying to, and if it's well received, if you guys appreciate it, then I'll probably post another one similar to it, like a more in-depth, like on risk management or psychology or something like that. I think it'll be helpful. It'll be a pre-sale for private group, and then a couple of my personal buddies. So that'll be I'll send it out. It should be done in the next 1 to 2 weeks. That was in the announcement post. And then it'll be open to the general public after that. But it won't be for like public distribution. It'll never be, here's the PDF if you want to download it. It'll always be kind of kept behind. It's 3 years of work, so I'm not going to make it free, to be completely honest. But I think there's enough value in there that one good trade will pay for itself. That's the goal. So the value in it is way more than what you're getting. It's not some Romeo course, as you probably expect. But anyways, my expectation for the rest of the day, bias for the rest of the day. Where's the weekly start? As of right now, that was it. That was what I was looking for. 2693. That would be these relative equal lows down here. You could use as a draw. But as of right now, we've already taken out the previous day low, current week low. And that is all that's required for today. So now we formed the low, we formed the SMT. That would, Thursday and Friday could consolidate too. But I'm expecting to drop slightly further. So you could look for the Friday 4 a.m. low. And then even some of this low resistance over here, I don't think is out of the ordinary for us to sweep that. So my bias for the rest of today and going into tomorrow should be bearish. I'm not going to be trading tomorrow. I'm not going to be trading Friday. There will not be streams on those days either. So that's what I'd be looking for the rest of the day. I'm also not going to be trading PM session, anything like that. So what was your favorite macro entry today? If I had to pick, probably either the SysD here. As soon as you drop through that, take that as your first entry, or the bearish order block here, or even this macro entry post 10 a.m. Now that gets a little sketchy as we drop and form that new low, but either the order block here, I think there was also a 5-minute gap if I'm not mistaken. Yeah, 5-minute gap. Oh, we don't trade into it, but been game changer before running to. Used to trade 10 to 11 SMTs, but now I'm understanding suppressed my previous understanding. Thanks be to God. There you go. That's the goal. Transfer all the important stuff and sift out all the sand. I try and drop the fluff. Flux tries to drop the fluff. Exactly. Anyways, so yeah, 20, what did I say? 2693 or something was the next DOL. And then you have noon as your end of London close, right? So we still have a chunk of time. We still got about an hour and 10 minutes. So I really could care less. We've already dropped how many points? I don't know. It was 180, 200 points. So anyways, take care of the rest of the day. Actually, the rest of the week. Happy Thanksgiving if you celebrate it. If not, if you can, spend time with some family and friends, or just reflect on the blessings that God has given you. Nothing should be taken for granted. But otherwise, I will hopefully see you guys. I'll be busy probably Thursday, Friday, Saturday. So there may be a backtesting stream on Saturday morning, but I really don't know. Or we'll have them next Monday. I'll try and sort it out, and I'll ping it. I'll ping everyone obviously beforehand, and then I'll post the stream recording regardless. I'll also post this stream recording later today too, if you wanted to go back and watch it too. But yeah, enjoy your day. Enjoy the rest of your weekend, and get outside if you can. Journal, especially something like today. Screenshot it and journal your psychology. And I'll hopefully, Lord willing, catch you guys next week for NFP on Monday, or the backtesting stream sometime between then. So take care. God bless and peace out.